We're at a minute past. I'll get started with some brief housekeeping. Thank you everyone for joining today's RGP and Workday joint webinar, Path to the Zero-Day Close. Just a couple of housekeeping notes before I begin. We are recording today's session. The link to that recording, along with today's presentation, will be sent to all attendees following the program. All attendees are in listening mode. We encourage you to use the chat feature with any questions or comments that you have at any time during today's presentation. If we're not able to get to all of the questions, the team will make sure to respond following the program offline. 1 CPE credit is available today. To be eligible, please stay on for the duration of the program and respond to at least 3 of the 4 polling questions launched during the hour. CPE certificates will be issued via email within 3 weeks of the program. So thanks so much again for joining. I'm super pleased to hand it over to Andy Jones, who's going to begin today's program. Andy?
Thanks, Nicole. Good day, everyone. As Nicole said, I'm Andy Jones. I live in Atlanta, and I have the pleasure of leading RGP's finance and accounting consulting practice. I'll start off with a brief apology for my voice. I'm a little under the weather. I hope it holds up for the short time you'll be with me today. More importantly, I'm flanked by a couple of our friends with Workday, Peter Lucas and Randy Rasmussen, so they'll handle the bulk of today's presentation. My team, we provide technical accounting and finance transformation solutions to help clients adopt leading practices, optimize process, and leverage enabling technologies such as ERP. We also use purpose-built platforms and other automation tools to help you automate as much as you can in the finance and accounting domain. I'm joined today also by my colleague, Bennett, who leads our Workday practice. A quick word about RGP before I begin. We're a global professional services firm that provides a broad range of consulting solutions, on-demand talent, and managed services for firms around the globe. Again, I lead our finance and accounting practice area. In addition to F&A, we also consult in areas such as risk assurance, tax, business technology, including ERP migration and stabilization, supply chain, program and change management, and a host of digital transformation services, including UX, CX, and brand experience, and also ServiceNow. While we support clients across the spectrum of verticals, we do have dedicated support within financial services and healthcare verticals. So let's get into it. In assisting clients with optimizing their finance and accounting processes, we see a wide range of capabilities and deficits across all the cycles within the finance and accounting function, including order to cash, procure to pay, FP&A, hire to retire. But many of the firms that are undergoing these finance transformation efforts are focused on improving the record to report cycle. And in the first few minutes of our presentation, I'm going to touch upon some of the factors that are driving them toward improvements in R2R. Before I do so, however, it's time to take a polling question. For those of you seeking CPE credit, you want to, again, answer at least 3 of the 4 polling questions during the time we're together. How would you rate the complexity of your current financial close process? Eager to see what you have to say, and hopefully the comments that follow will be applicable. We'll leave this open for about another 20 seconds or so, and then we'll get moving with content. Getting ready to close out. Hopefully everybody's had a chance to enter your responses. If you haven't entered a response yet, please do. Nicole, shall I close out? And I'm going to share the results really quickly. Looks like most of you have rather either medium or complex financial close processes. So part of this messaging will be targeted towards you. It should resonate with what you're experiencing. First of all, what's driving the demand for transformation of the close process? There's really 3 factors that it all comes down to. There's time, there's money, and there's people. And in the next couple of slides, we're going to talk a little bit about each of those factors and why There are imperatives to improve your financial close process and streamline your reporting. As you can see from the chart here, there's a significant difference in the time that it takes to prepare monthly consolidated financial statements between the top performers and the median, as well as those in the bottom quartile. The differences are exacerbated in year-end reporting, as you can see on the graph to the right. Two things really to point out here. One, the time that's lost impacts the CFO's ability to dive into the information and provide insights back to the business. I constantly hear, oh, what I would do to have a few more days to analyze the information before I have to report it. Second point is it's really not just about time. We're going to talk about it a little bit more, but it's also about money and the energy spent. This chart here shows a little bit of the interconnection between the R2R and FP&A cycles. I know you're all eager to get to the Workday demo, so I won't spend a ton of time here, but suffice it to say that time spent in R2R, any time that we save there can benefit those doing planning, forecasting, and analysis in the FP&A cycle. So let's come back to that other point that I was making a moment ago. It's not just about the duration of the financial close, but what about all the excess energy that's consumed by an inefficient financial close process? As you can see here, there's a 5x difference between those in the 25th percentile, or the top performers, and the 75th percentile, or the bottom performers. Even those in the median are quite separated from both the high and the low performers. So what does that mean? It means that firms they're wasting a lot of time and effort in the preparation of their financials. And no matter where you are along this continuum, there's room for improvement. I even have clients that are in the top quartile that say, what's stopping us from getting better? This is a factor that's really come about over the course of the last 5 years or so. And I think that this people component of the financial close and general accounting, quite frankly, is becoming more and more important. A few years ago, the word I heard from CFOs was, how do I do more with fewer people? It was all about cutting heads. Now, what I'm hearing is firms are looking to ensure that they can retain the right people in their organization, but they want to have them performing more value-added tasks. According to AICPA, 2018 saw the lowest number of candidates taking the CPA exam than in over a decade. And those kinds of trends seem to be continuing. There's fewer students that are graduating with accounting degrees. According to AICPA and their recent trends report, the numbers of graduates at both the bachelor's and master's levels in accounting fell in 2020 by 3% and 8% respectively. And the last data that I saw says that trend is continuing. Something else that's particularly of concern is that the average age of a CPA, depending on which source you look at, the average age of a CPA in the US is 52 to 53 years old, which means that the majority of CPAs are within a decade of their retirement. And we've got to figure out a way to get this work done with fewer people in the pool. So what are the key things that you've got to do in order to become a top performer? Real quickly, standardize your process. It's very difficult to optimize or automate a process that isn't standard. Move account reconciliations out of the month end unless they're required. Rank your reconciliations by risk, velocity, volume. Automate recons wherever you can using technology such as your ERP platform, such as Blackline. Put time and effort into increasing your matching rates and auto reconciliations. For intercompany transactions, make sure you're posting both entities automatically. Automate as much as you can throughout the cycle to try to, again, save time and energy in all this. I'm getting ready to turn it over to Randy from Workday to talk to you about some of the real life examples. But first, we're going to go to a polling question. Polling question number 2. What's your biggest challenge in optimizing your financial close? Please take a moment, if you will, Again, you'll need to fill out, or you'll need to complete at least 3 of the 4 questions asked during the hour in order to qualify for CPE. Give you a few more seconds here. I see the votes rolling in. Couple more seconds. All right. With that, I think nearly everyone has gotten their votes in. About 5 more seconds. Get your vote in if you haven't. All right. It looks like we have a pretty even distribution here of people with outdated processes, with shortage of staffing and lacking technology. So pretty even distribution across the board. Randy, with that, I'm going to turn the microphone over to you, and I will drive your slides for you. Thanks.
Awesome. Thanks, Andy. And I just learned something, and I'm going to give away my age. I'm actually in that average range of CPA that you just stated. So I learned something new today. Randy Rasmussen, I'm the Managing Director of Technology and Media Industry here at Workday. I've been with Workday about 10 months now. I joined last year. I come to Workday as a former customer. So I was a controller of a company called Metadata, where we put in financials. We were a Workday HR customer. And then I worked for another company called Frisia, where I was CFO, where we put in financials and HR. So we did the full Workday platform. So with the next slide, introduce Workday to you. For those of you that aren't familiar with Workday, Workday is a enterprise management cloud software company focusing in finance, HR, planning, spend management, and analytics. Today, we're talking about financial solutions. We sell in a broad range of industry and company sizes. I particularly support technology and media. We're about almost $1 billion business, but we have 9 industries that we focus in. And we have significant customers in all of those industries. Across all of that, we have a little bit over 10,000 customers, and we service customers of different sizes. So in what we call the emerging space, which is typically customers that are less than 500 employees, which includes a lot of the startups, scale-ups, and pre-IPO companies. We sell into that range, into the medium enterprise, which is around 500 to 6,000 employees, and then the large enterprise, including the Fortune 500, where we serve 60% of the Fortune 500 and 70% of the top 50 of the Fortune 500. We are a global company with 65 million global users, and we have a little bit over 19,000 employees worldwide. You go to the next slide. Talking a little bit about, I'll say, my experience with financial transformation and a path to a zero-day close. I think a lot of times when you're looking at a company and you're looking at how fast do you get information to the business, how quick do you make decisions, it's not just about the function of accounting and the tasks that a certain department does, but it's really how do you support the business. So when I joined Metadata, we were on a legacy cloud general ledger system that really had a lot of bolt-ons and processes cross systems. There's a lot of manual reconciliation, lots of things in Excel, lots of conversations over email. And those disconnects made it very difficult for us to have insight into the business and to close the books properly. We implemented Workday financials and procure to pay across the enterprise, and it significantly simplified our system landscape. We reduced our close from 10 to 5 days. And Metadata was also quite acquisitive. So I think one of the things that companies find is as they do more M&A, that also slows down close cycles because you may have companies that aren't on your ledger yet. So having a system where you can quickly integrate and convert the acquired company into your standard system really accelerates your ability to close fast. Metadata was purchased by a French company called Dassault, and I found an opportunity at Frisia, had just gone public and was in need of building a finance department and putting in a world-class ERP system. So Kind of a repeat. I did the same thing that I did at Metadata, where I built up a team and implemented Workday across the board. Similar issues with ineffective general ledger. Phreesia was very Excel based, so even some of the current ERP functionality wasn't used, and there's a lot of Excel, again, manual controls. And I think, one thing that was really beneficial at Phreesia was when you looked at controls, and a lot of times when you're thinking about close, you're thinking about journal entries and reconciliations. But if you're a public company, and both Metadata and Phreesia were public, you also have to document your controls. So the automation extends beyond just transactions, but also demonstrating how do you review, how do you make sure that things are right. And you can have a lot of like manual controls, Excel checks, things in email, but that takes a lot of time and it's really ineffective. With a tool like Workday, we basically automated 80% of our controls, and the controls prior to that, I would say, were the flip. There was about maybe 10% that were system type of controls and 90% that were manual. Quite a significant, I'll say, path to zero. We went from 15 to 30 days. The 30 days was a first month after year end when I first got there, down to 5 business days. And we did some interesting things there. Peter is going to do some demos of some of the functionality in Workday and how it can accelerate the activities of close. But one of the things that was kind of unique that we did at Phreesia, which Peter will highlight, is we're able to automate the statement of cash flows, which was a pretty cool thing, to be able to generate a report instead of populating an Excel spreadsheet with a balance sheet differential and filling all the different columns. So in both these cases, I think there maybe are 3 key points as kind of takeaways, as I led financial transformations here, is with a system like Workday, we really focused on analyzing business transactions in real time before month end. And when you have a good system and you have good visibility, you find those errors sooner, or things that make you need to ask questions of the business sooner. We also developed a talent in the accounting organization to better align with FP&A and business leaders. And again, doing this during the month. I've been in many organizations where accounting finds out that the business bought something or launched a new product or did something that they didn't know about until they closed the book. So it's not just about systems, but it's also about connections with the business and talking to people and being close to the business. And I think sometimes accounting and FP&A don't always talk to each other. FP&A is usually talking to the business more. So I think from an accounting view, you should talk to both FP&A and your business leaders to know what's going on. And then the other thing that I always mention too, which Andy mentioned a little bit, was it's not just about accounting and producing a view of the past, but it's really quickly turning reports over and closing the cycle so that if your company is doing monthly forecasts, that there's the new starting point of the forecast is done earlier. Then the FP&A team runs the forecast, and then you can produce information to your business in a management package or discussions or however you do it in your company. And if you do this quickly and you get as close to a 0-day close as possible, you're actually giving almost real-time information to the business. And if you're a public company that's on quarterly cycles, and you're doing a quick monthly close, you can actually give information to the business with enough time for them to actually make a decision and impact. So they could, slow spending down. If they have a professional services business, maybe, get more people in the field to generate revenue. So there's, interesting things that the business can do if they have information sooner than later. So I just wanted to share that with you. And I think the next slide is a polling question. And the question is, how many employees are in your organization? This is an easy one. Hopefully you know. And I guess if one of you, I don't have the control to turn it off, so if you
Yeah,
want to
we'll
close
leave
it.
it open for another couple of seconds as we get people.
Okay, interesting. So we have quite a few large enterprise and then kind of in the medium, but a little bit from all different company sizes. So interesting. So with that, I will turn it over to my colleague Peter, who will show us some of the functionality and tools to help you accelerate your close.
Appreciate that, Randy. Thanks for all that insight. That was really interesting. So hello and welcome, everyone. Thank you for joining our presentation today on how Workday Financials is one of the only cloud ERPs on the market that's positioned to deliver an accountant's dream, that low-touch, zero-day close. My name is Peter Lucas, and I've been with Workday now for almost 2 years as a financial solution consultant. The role of a solution consultant is to have a deep product knowledge, but more importantly, to be able to speak to how the technology will help streamline your processes and ultimately increase profitability. And I think my background positions me pretty nicely to do just that. I'm based out of Chicago, and I spent my entire career, close to 14 years, in the logistics industry in both accounting and treasury functions. So I've lived that pain, the late nights that come with managing a period close, and I'm really excited to show you today how Workday helps to ease a lot of that suffering. Before we go any further, I'll lead with our safe harbor statement. Everything that I plan to show you today is current functionality, but Workday is constantly investing back into the product and coming out with new features. So if we touch on a roadmap item, I'll definitely be sure to call that out. Okay, the typical close process for a company is long and arduous. It involves multiple systems, multiple batch processes, and multiple copies of data. And much of that work is compressed at month end. And the insights that you need are available only once that close is complete. Now, what Workday does, they change that schema by enabling you to have a continuous close process throughout the month, delivering real-time insights powered by machine learning and a dynamic unified platform. Now, let's level set on today's agenda. The next 30-ish minutes or so is not going to necessarily be enough to hit on every way that Workday can help you manage and expedite your period close. That said, let's focus today's conversation on the ways that Workday allows you to gain insight and automate processes so that you can take action before you even get to day one of the close. So we'll break this overview demo up into 3 sections. To start, there are probably many of you who may not even be familiar with Workday's financial platform. So we'll begin with an overview of Workday's general ledger, and then follow a transaction to see how Workday automatically consolidates, eliminates, and translates at the moment you run a report. And as a result, you're going to get access to meaningful financial reports that you normally wouldn't be able to view until after month end. Next, you'll see some highlights of Workday's close management capabilities, including machine learning, anomaly detection, and a robust allocation engine. And finally, we'll end today's presentation highlighting one of the important reports that you'll be able to automate, one that Randy talked about automating in his past experiences, that statement of cash flow. All right, without further ado, let's go ahead and jump into the system. So right now, we're logged in as Teresa Serrano. She's the global controller and super user. She's a bit of an internal controls nightmare, but she has a lot of access, and that's helpful when we do our demo. And I mentioned that access because security is really critical in Workday. You don't have to spend time updating a lot of your reports, and when there are organizational changes, all that can be dynamically updated, and you're delivered the insights that you have access to and only what you have access to. We are logged in on her homepage, which is configurable, but this is a dashboard, and a dashboard is an area of graphs, charts, tasks, all related to a specific domain. And it spans the entire platform. So whether that's your HR data or your financials, you'll have visibility to all that, and you can even blend that information to be able to give you insight that you might need. Now, in Workday, transactions and reporting, they are part of that same system. So there's no batch processing. You don't have to wait to the end of the month to view your consolidated results. And Workday will dish these out to you in real time. And these reports, these worklets that you see, these are not just static charts. You can actually drill into them to start getting insight. So let's start with one of those drills. So normally when you're drilling into a report from any of those other legacy systems, you might have a couple items that you could choose from. So maybe it's company, cost center, account for sure. But you're really limited to what you can get to from a single report. Now with Workday, we offer over 100 different dimensions and 25 additional ones that you can customize that will allow you to interrogate your data like no other system can. So let's start off by We're looking at an operating expenses report by cost center, but you could change that to now look at it. Let's categorize our expenses and see the breakdown from that perspective. Now you can clearly see salaries makes up the majority of that spend. You can do a matrix style lookup. So here, so maybe you want to see that spend across all of your companies. You can easily do that. And now you have that full global view of all of your spend, and you're able to get insight from here. Maybe you have a new Canadian entity and you want to start understanding the people. Again, that value of having your whole platform in one area allows you to do that. So you can drill into here, and now I can look at things like worker. And if you have the proper security, you could even get down to some really nitty-gritty stuff like pay component. So now you have a salary breakdown of all of your workers in that entity, in that Canadian entity, and you can even get all the way down to those source transactions. Now, I will highlight one thing. So we're paying our employees in their native currency, so it's in Canadian dollars, but Workday will automatically do that translation for you in real time. So really important from there. All right. So how are we able to do this? What is giving you the power to do this? Let's jump back to slides real quick just to talk through that. And the way we're going to start talking about this is talking about legacy ERPs and that traditional notion of a chart of accounts. A typical account string is what you're seeing here. It's certainly, and that would certainly include company account. Maybe again, you might include cost center or location. And what this allows you to do is produce a financial statement. But if you want to do more analysis, you need to add more detail to that. And that's where Workday's flexible and dynamic chart of accounts comes in. So with Workday, you have that same ability to require all those same items that you have today. So company account, maybe it's cost center and location or some other variation. But you can start to add additional dimensionality to those transactions. So in Workday company account, those two are required in order to run a financial statement. But maybe you also want to require some other dimensions. You can make those required on every transaction. But then you have the flexibility on other transactions, and that doesn't have to be the same for a customer invoice for a journal entry. So you can be flexible in what you might want to add so that you could start really getting more information out of your system. And that allows you to start doing things like your operational management and KPI reporting without having to move data to another system. So one of the advantages of Workday is our transactions are reported, they happen within the same system. So immediately after a transaction is posted, you have the ability to report on that and interrogate that data to see the detail associated with that. And this is really a game changer because it's your data is only valuable when you're but again, I was going to say your data is only as valuable if you feel confident with it, with those data inputs. So on top of the ability to be able to drill into this, Workday lets you set up validation rules and defaulting dimensions to help you ensure compliance and be able to simplify that input on your end users. So let's go ahead and jump back in. Now that you kind of got a flavor for what the Workday has from the general ledger perspective, let's go ahead and follow a transaction and see how Workday can automatically consolidate and eliminate in real time. So to do that, we're going to head over to Teresa's inbox. And an inbox is really an extension of the business process. So any tasks, to-do items, anything related to anything within the platform will be delivered to your inbox and will let you focus your attention on things that need to be done. So you're not clogging up your email. You have a single source of truth for everything that you need to do. So you can see where we're going to look at a customer invoice, but you have a supplier invoice, expense reports. Even for your closed tasks, you can deliver those to people's inbox so that you're ensuring that they are staying on track. Let's go ahead and look at this invoice itself, though. I want to highlight just a few things. One, just for our knowledge, so when we look at this later, we're looking at invoice 14989. I'm even going to write that down so that I can remember that. And then we're operating out of at the header level, you have your US entity. And then you have all that typical header information you would expect. The next thing that I want to highlight is that this is an intercompany entry. So yes, we have two lines here We have one for our USA entity and one for the Canadian entity. And we'll see how Workday can automate the intercompany transactions from here. The last thing that I want to show you on this invoice is this work tag section. So work tag, just think of this as a dimension. These are what give you that ability to drill into your data. And we saw that here just a moment ago. So we're looking at an operational transaction. So you can see you can add things like more than what you would expect. So channel, we have employee, line of business, any of those dimensions that you want to be able to use to investigate your data, you're able to add those to your transactions. All right, so let's go ahead and approve this invoice. And when it does this, Workday has a business process that sends it on to the next person or the next area that is in order. In this case, we have a green check mark, which tells you that your process is complete, but you do have that full auditability to see everything within the system. Let's go actually back to the invoice itself, which you can do to right from here. And one thing I didn't point out, but you should note, is that nowhere on this customer invoice did you enter a general ledger account. And that was really intentional. Workday lets you operate in plain language so that you're simplifying that data input for your end users. So you don't need to necessarily know every segmented general ledger account. You can simply put in what are we operating with, in this case, product one and service one, and utilize that information. And then there's a rules engine behind the scene that is going to go ahead and drive the ultimate accounting to your ledger. So let's actually prove out that we do have ledger accounts though. So let's go and view the accounting. And a couple things that I will highlight here is one, you have that intercompany payable. So this automatically was tagged to your entry based off of that the system understood that this is an intercompany entry. It's for $15,000. And then it automatically flagged a work tag of the intercompany affiliate. And this is going to be important when the rules decides what should be eliminated and what shouldn't be eliminated when you're running a financial report. The next thing that I want to highlight is I mentioned that Workday doesn't strip that dimensionality once you get down to the ledger like it does in other systems. So you can see all that rich dimensionality, whether it's division, employee, line of business, or even tax information, all that comes to the general ledger. And then again, that rules engine will take some concatenate or some combination of maybe it's revenue category, maybe it's sales item, and then it knows in the system, hey, this is actually revenue, let's post it to the revenue account. And this is really important because it helps simplify the input, and then you could really simplify your chart of accounts. We have customers that report telling us that they started before Workday with thousands of ledger accounts, in order to do their segmented reporting, and now they can simplify that to, in some cases, under 100 accounts. And no longer do you have to have that big report book at your desk trying to figure out, well, what account do I need to book this to? You're simplifying that, which is going to expedite every transaction that you have in the system. Okay, so you've seen how you're able to drill into your data. You're seeing how you're automate the intercompany transactions. Let's go ahead and show how you can automate a consolidation elimination report. And we'll do that through the lens of a trial balance. So I'll head over to our global menu and look at one of our shortcuts, and we'll go to a consolidated trial balance. Now, before running this, I will point out a few things. When you're running a report, you can do this for an individual company, or you can set it through a hierarchy of companies. In this case, we're going to do it for the consolidation North America, but you could set up these different consolidation trees, whether that is legal entity driven or some other reporting method. You have the flexibility of having entities be in multiple trees so that when you go to run a report, Workday's flexible enough to know what should be included and what should be eliminated. The next thing I want to highlight is this book. So you can have, maybe you have multiple books. So maybe you have a tax book or an IFRS books. Simply, you're able to tag your journal entries. And then when you run your report, simply update which book that you want to run at, and Workday will automatically take care of the reporting side. And then the last thing to point out is that this is going to automatically translate at the time of running this report into USD. So let's go ahead and run that. You can see that this is a consolidated report because we have entities in Mexico, Canada. Let's go ahead and zero in on that intercompany account. And then we saw that it was that journal entry was tagged with that intercompany affiliate. And so we didn't make an elimination entry. You didn't see an elimination entry, but that happened automatically when you ran this report. So if you drill into our elimination column, this isn't a black box. You have insight into all of your eliminated entries. So you can look at this by company. You can set this, cross-reference that with intercompany affiliate. And now you can see when you're looking at that cross-section of your USA entity and your Canadian entity, if you click into that there, and then let's go ahead and filter this on just customer invoices, you can see that that customer invoice that you just approved only moments ago is now available in your eliminating column without having to do any work. So I'm gonna just pause there for 1 second because I actually think that's really impactful. I mean, sometimes I breeze through that, but you really need to think about how much time is spent when running these consolidations, running eliminations, having last minute journal entries come in, and then having to re-eliminate. All of that is going to be streamlined when you have Workday. All right. So you see now how the platform enables you to interrogate your data and seamlessly run consolidated reports. These are tasks that normally you would have to wait until during or after the close to get insight to where the business is trending. Let's now take a look at a few other tools you have at your disposal that will enable you to shorten that close window. And we'll start with some machine learning. So I'm going to take us to another dashboard, and we'll go to the close and consolidation dashboard. All right, and in this first tab is our adjustments and anomalies. And the first worklet that you see here is this journal insight. So as Teresa, you're going to have visibility to all of the areas in your ledger where the machine learning has identified that this is against your historical trends. And you'll have visibility into any of that and see how you adjusted it. And that could change your behavior going forward. Well, maybe we need to start adding more controls here because we're having misses with our cost center. You keep scrolling down here, you'll see a graph of your GL trending by cost center. And you could see that for the month of March, the field marketing has all of a sudden skyrocketed way beyond what historically is representative of that cost center. So let's go ahead over to Journal Insights and see how we might be able to, the system might be able to, dish out some solutions for that. So here we have a couple of different examples. We'll click into one. And the system is identifying this as a high likely for risk. So it has the ability to say this is high risk, low risk. It is said that there's an anomaly reason. So it's saying the risk is that the cost center is wrong. And it's making a recommendation that it thinks that this should be a legal cost center. What is that based off of? Well, you can see that this is a legal supplier. It's utilizing that spend category of legal. So it really doesn't make sense for that cost center to be the field marketing. So at this point, if you agree with what it was, you can dismiss the anomaly and the machine learning will learn from that and be smarter the next time around. You can confirm the anomaly without making a change and it'll still learn from that. Or you can go ahead and create a journal entry and make the fix right from here. So that's really important. In my experience as a manager of the month-end close, I can remember spending a day, if not multiple days, combing through the data, running pivot tables, and making sure everything was tagged correctly. And that takes a lot of time during the close. And if you could surface up those insights prior to that, that's really going to add a lot of value and help you shorten that window. All right, let's go back to that close and consolidate dashboard. And one other area that I want to talk to about how you're able to really get that insight prior to the close is through our allocations. So we're going to go to the allocation work area here. And in my experience as well, allocations take a really long time. They're often operated out of Excel spreadsheets with complex macros that only maybe a few people can handle, and if they ever were to leave or if the file breaks, it really becomes a mess and it could add days onto your close. And there's no visibility into, well, what are we allocating? How do I get that insight? With Workday, you'll have full visibility into your allocations and you'll have the ability to actually run pro forma allocations. So you can choose whether you want to include those results or not based off of the same filters you saw when running a report. Additionally, how many times have you experienced this where you have run an allocation, you thought you were done, and then some last minute journal entries came in and you didn't realize you had to run the allocations again, only when you got to the point where you didn't have the time to actually do it. So you're scrambling. Workday gives you, again, visibility to surface out these instances. So here you can see we have some warnings where your allocation has sourced and it's changed the results. I think that's critically important. Finally, one last thing that I want to talk about is the ability to look at your allocation details and get those results. So in Workday, because of that dimensionality, you can really narrowly focus on what you want to allocate with ease, with clicks and not code. But let's go ahead and take a look at one of these allocation results here. So here you're going to see what is the basis for determining how it was, whether that's a statistic or it's utilizing work tags within Workday to automatically do that. You're going to see the target offset, the target, or so what did you end up with? And then you'll have visibility into that actual source detail. And you can get all the way down to seeing what the journal entries and even get all the way to the journal entry itself. So full visibility and flexibility to have so when you're getting questions, well, what is included in this? Why am I getting all this additional expense this month from my allocation? Now you have that visibility to answer those questions much quicker than you could before. All right, let's head back to our closed dashboard here. Okay, so the 0-day close. I do believe that is possible, and if not possible, at least something to really strive for. I think Workday itself does a 3-day close where they close everything in the first day, and then they use the next 2 days to actually do your analysis. So with that in mind, it's going to be important in order to reduce that, you need to benchmark where are you and be able to have full visibility and control over your entire process. So on this dashboard, you're going to have all your different close tasks. You'll be able to monitor your monthly close performance against a target. You're able to see all the steps in your close business process, including, and you can have different steps depending on for your different entities. So maybe in this case, your Canadian entity has a 20-step close, but this particular entity only has 8 steps. So you can really configure the different steps for your different organizations. You'll have full visibility to where you start, what % complete you are, how many steps, what is the current step you're on, and who is that assigned to, and then all of those different steps along the way. Now, Randy did mention Blackline earlier, but Workday also has a reconciliation tool within here, which has a lot of the same features that suffices for a majority of our customers. So you have this ability to track. You have the ability to track your reconciliations, those lead pages with comments. You're able to pull data directly into your sheets. You're able to and track that performance so that you can stay on top of all of that. All right. The last thing that I want to talk about today is let's go ahead and talk through a little bit of reporting. Now, reporting is ubiquitous throughout Workday. You've seen that in dashboards. We have a large tool set, and it's really depending on what you want to use it for. So yes, you can get it in dashboards, you can get it in inboxes, you can create monthly reporting binders that are automated. Workday is going to, out of the box, give you a bunch, hundreds really, of delivered financial accounting reports to help expedite you setting these up that you can go ahead and easily tinker yourself. But to reference one of those reports that Randy was talking about, let's go ahead and take a look at that quarterly cash flow report and how Workday can help you automate that. Now, I was a former treasury manager, and I was responsible for providing the cash flow report to our lending bank. And this was a real pain. monthly having to, and the reason it's a pain is because in many instances, it's not as simple as it's just the change in your balance sheets and then it goes to this line item. There's a little bit more nuance, and that can make it very hard to automate. And so I was a little, truthfully, I was a little skeptical of it even possible. But now that I've been involved in the product, I've listened to our Workday team and understand that they are fully automating it. I'm a true believer, and I think it's amazing technology that's going to help you really expedite reports like these. So one thing to point out on this cash flow report, this is drillable just like any of the other reports. So you can drill into this data and you can automate the tagging into categories. So here you can drill into it. And let's walk through the fact that you need to, when you have a cash flow report, you also need to be able to tie out that cash flow report. Workday also is streamlining and automating that for you as well. So Randy mentioned this, but it's important. It's better when you see it. So you can see across the top, you have all your different balance sheet areas. You have your period over period change, and then all of your different cash flow buckets. That's all set up in the report. And then you have all of your different buckets that your entries need to go into. Now, this is really important. So how do they get into these buckets? I mentioned that it's not as simple as necessarily this general ledger account needs to go to this bucket. Let's click into one of these here and just talk through some of the ways that you can automate the tagging. So in most cases, that probably does work, and you can utilize things to automatically flow. So in this case, you can see let's look at this entry. So based off of some combination of either the account or this journal source, you can see that that is automatically put into this other asset bucket. But then you have other accounts that maybe the account alone isn't enough to say it should belong in this bucket. So we have the VAT account, but then you need to go ahead, so the VAT would be the journal entry, but in this accrual journal entry, this account, you might need to add things like cash flow codes. And you can automate a lot of it. You can either tag them manually when you're doing your entries, or you can create up a set of rules that says, hey, when you're using this bank account and it comes up with this code, automatically tag it with this cash flow code. And that's going to help drive which bucket it ends up going into. And that's critically important. So now when you have this, you're going to be able to automate both the cash flow and your cash flow support, and you'll have that visibility, and you're going to save time from a reporting standpoint. All right. So to wrap things up for today, what did you see today? You saw how Workday has a flexible and dynamic general ledger, which gives you a tool set to investigate your data from anywhere on the platform. There's no batch processing, and you can seamlessly run a translated, eliminated, and consolidated financial report throughout the month. So you're not waiting for that short little window to review your financials. Machine learning is embedded in the platform to reduce your risk of errors. You can effortlessly run pro forma allocations, and you have this full tool set for managing the entire close process. And even if you can't get to that true 0-day close, armoring yourself with the tools to shorten that window is really going to allow you to be a more strategic partner to your organization. So thank you, everyone, for listening to that. And I will pass it back to you, Andy.
Thanks very much, Peter. I appreciate that. And I got to say, that's so exciting. And now I know why my team enjoys so much, streamlining process and implementing technologies like Workday to help drive clients toward the 0-day close for sure. I am going to put up before we close out and get to questions, I am going to put up our fourth and final polling question. With that, our fourth polling question: how urgently does your organization need to improve its financial reporting capability? Best in class, no immediate need. We need it, but we don't have the budget, or we're actively seeking solutions. If you will, take a few minutes to complete the poll. few of you have answered. Don't forget, you need to get at least 3 of these completed. And the insight is always good for us as far as it helps us understand who we're talking to. So a couple more seconds and then we'll open it up for Q&A. All right. So looks like a lot of people are actively seeking solutions, which is good that you're acting upon your needs and instead of standing on the sidelines. And of course, for people like Workday and RGP, that's music to our ears as well. With that, why don't we open it up to questions? I have not been able to keep up with the chat, but Nicole, I believe you have been able to. Are there any questions that we need to address today? And obviously, if we don't get to people's questions during the real-time Q&A session, we will indeed read through and follow up with you individually.
Absolutely. Please feel free to submit any more questions that you have via chat. One did come in. Our current reporting package that we send to the bank is out of Excel. Do you have the ability to pull Workday data directly into Excel?
Absolutely. Happy to answer that question. So Workday has, as I mentioned, a large tool set when it comes from reporting. We didn't have necessarily time to dive into every one of those reporting tools, but one of them is an Excel add-on called Office Connect. And we know with accountants, it can often be hard to take them away from Excel. I mean, I loved Excel, and a lot of your reporting packages are already pre-configured in Excel. So what that Office Connect add-on does is it brings in the security of Workday. So the ability, and it allows you to pull in data from Workday, and then you can drill back all the way to the source system based off of your security profile and automatically roll data as well as link it to potentially PowerPoints or Word documents to update board packages. So hopefully that answers the question there. Yes, we definitely have the ability to pull in that data from Excel.
Excellent. Thank you so much. Another question. What is Workday's approach to handling depreciation for tax books versus GAAP books?
So I think you saw when we were running reports that you can select which book you want to run at. So you can definitely run reports based on that. But I think the question is really asking, well, how do you tag? How do you make sure that it is do you have to make 2 different entries maybe, or do you have to, or what is involved in that? And the answer is when you go to set up your assets, you can set it up so that it reports to different depreciation books, and then it will automatically post. So that's not a different ledger. It just automatically knows that it is assigned to that asset, so that when you go to actually run your different depreciation books, it will know to automatically update it with whatever book you're running it at.
Thank you so much. Another question that came in. How does anomaly detection work across journals? Is it based off defined business rules, or is it true ML modeling?
It is not a rule based, so you don't set up rules. It'll be based off of your historical data, and it will use true machine learning modeling to come up with that. And it does grow and learn the more the entries that go into your system. It also utilizes historical data when you go ahead and load that from the beginning. So you're not necessarily starting from square zero when you start with Workday, because you're likely going to be loading in some of your historical data.
Thank you. We did have a question about what large school systems have implemented Workday financials. I'm not sure if that's something you want to comment on.
Let's take that as a takeaway,
Okay.
and I'll pass that out to my colleagues in the government industry to speak to that.
Yeah, and I'd say we do implement at large school systems. We just are careful about mentioning names in public without permission. So.
And I do see a question on there. Is this just GL or is there sub-ledger functionality? So I do think in certain ways that's legacy speak to some extent. So we don't have necessarily a separate sub-ledger where you have to spend time reconciling back to your general ledger. It's all one part of your ledger, but based off of your transaction flags, it recognizes this as an AP invoice or not. So it is an entire platform that you're able to get, run agings and do all that from the ledger. So it's not just a GL, as I think the question is alluding to.
And if you saw, there's a follow-up on the anomalies. What if historical data doesn't have any anomalies tagged as those? How will the model learn?
Well, it won't necessarily know that there was an error in what you have, but it'll recognize that it'll recognize the patterns that are within your data. So if you have maybe you have a specific supplier that is often booked to this code, or it's also not just like cost center, it's also amount anomalies. So maybe the dollar amount might be, normally you're doing an accrual for 10,000, but this month it was fat fingered to 100,000. It is able to surface out those types of insights too. So it doesn't necessarily need to have seen an error corrected before to necessarily be able to help you with prediction, but it does need your data in order to surface insights.
Thank you. Another question, is the CNA of Office Connect data covered by the SOC report?
Say that again, CNA? Oh, CNA. What does that acronym mean? I'm sorry for my ignorance.
The SOC report, I think covers. That's probably one that we take away. I mean, the SOC report is comprehensive, but I don't know if we can comment on specifics of what's in or out.
Thank you. Yeah, let's take that as a follow-up as well.
And I think we're getting close to the top of the hour. So if there are questions that we didn't get to, we will go back through the chat list and make sure that we answered. And again, our contact information is shown on the screen. Nicole, did you have any other housekeeping items that you wanted to review to remind everybody as far as CPE and what happens after this, after we close out?
Absolutely. Thanks so much, Andy. Real quick, everybody will receive a link to this recording along with today's presentation, and the CPE certificates will be emailed within 3 weeks of the program. Thank you.
All right,
Thanks
you,
all
everyone.
for participating, and Peter, Randy, Marie, it was a pleasure.
Thank you.
Thanks a lot. Take care.